Hey everyone, welcome back to our monthly tactical update for July 2025. I'm Michael LeBlanc, Senior Portfolio Manager with LLC Private Wealth at CG Wealth Management. Let's unpack what July brought investors from US equities to global headwinds and take a look how Canada fared through it all. So let's dive right into things. As always, these videos are for educational purpose only. Please reach out with any questions about your individual investment strategies or portfolios would like to us to take a look at it. To start off, though, I want to introduce a new featured video we're going to do on a monthly basis. It'll be hosted on our Mike on Money channel. It's going to focus on market mistakes. We talk in these updated videos. We talk about what we do in the portfolios and what we're optimistic or what we're looking at. But through our regular due diligence for our portfolios and our research, we always come across areas of risk, usually unknown or undiscovered risk, and common errors people might make in portfolios that you should really be aware of. So these monthly videos are going to highlight these and how you might want to avoid them. Or if you are going to look at some of these areas, because some of them are specific areas or sectors, if you're going to be looking at them to really understand what you're exposing yourself to, what the risks are and what the opportunities are. So look out for our first video coming in September. We'll have a little teaser out in August here, but we're going to launch things off for September with the monthly market mistakes. So let's talk about the markets and what we've seen out there in July. Obviously, the market momentum continued. The S&P 500 posted its third straight month of gains, rising about 2.2% in July, hitting multiple all-time highs through the month. The Dow saw a modest increase, 0.1, 0.2%, while the NASDAQ had the strongest. We're going to talk a little bit more about the tech names with about 3.7%. So all in all, the markets have maintained pretty strong. The market strength was led, as I mentioned, by the tech sector with this renewed push on AI stocks or AI companies, where they're driving more investment into the area and seeing more optimism about that the use of AI in day-to-day life or day-to-day business services, really. And we've seen some hits and we've seen a lot of misses on that front, but more money continues to pour into it, and we're seeing a surge on those stock names. We are also starting to see a big battle brewing or starting to develop with the AI companies for talent. We're seeing a lot of poaching going on between the big players and some big dollars being thrown around. So we'll keep an eye on how that plays out because that can affect obviously earnings and growth. Um, when we talk about headwinds and emerging risk, taking a look at the economic data, turn a little bit more cautious. Obviously, been big in the news. July's U.S. job numbers disappointed expectations with only 73,000 new jobs were added and unemployment ticked up. Obviously, it's been in the news because Trump went and fired the person responsible for putting those numbers out, saying they must be fake. But that's it's way below expectation, and they even revised prior months sharply lower. So the outlook um, on the job front in the United States is decreasing, and that's not surprising. We have seen that, inflation and companies cutting back all around the uncertainty with tariffs. In fact, a lot of analysts out there are starting to warn of possible stagflation scenario in the U.S., given mix of some sluggish growth and persistent inflation out there. These as I mentioned, problems are just being fueled by the tariff war that's being waged and the uncertainty around it, right? I mean, companies can't make decisions if they think something's going to be tariffed 30, 35%, 50%, next week, or it's going to be 0 or 10%, or, that type of uncertainty just causes problems for companies to invest in growth, and that's going to affect the job market and everything else. Looking at volatility, around that July was actually a record low volatility month, and mostly because all the tariffs we're kind of on pause for most of July. We started in August 1st when the tariffs were supposed to come on, and sure enough, the S&P fell back 1.6% in that single day, as we walked out of the gate with the tariffs kind of back on the table again. The U.S. dollar fell to a 10-day low with those tariffs as well, and that was after a pretty strong July around the U.S. dollar. I will say the outlook on the U.S. dollar, because of this uncertainty around the tariffs, is negative. We are expecting the U.S. dollar to it's not a straight line, but we do expect it to trend lower. Um, the uncertainty regarding the U.S. trade look to set the remaining elevated sweeping tariffs that kicked in is causing this headwind, and that's just going to stick around. On the flip side of that, we saw gold rise to the highest level since mid-June, again triggered on that uncertainty around tariffs, especially with the increase on goods from India and potential new levies on Japanese products. On the global front, the markets were lifted by pretty strong earnings sessions, especially earnings out of the US and some EU companies. Not all great, but overall pretty good given the volatility we saw earlier in the year, as a lot of names came out with some pretty good numbers. We saw that again a lot in the tech sector. Meta, or Facebook stock, Apple, all came out with some pretty good numbers. There is a bit of concern, hanging over the markets, especially with the potential change around a Fed leadership change. If Trump decides to oust Powell, and also the credibility of the data we might be seeing out of the Fed going forward, if that were to happen. If we look at Canada, though, the TSX did hit new highs in July, closing at 27,000, or just over 27,000 at the end of July. Mostly again led by tech, and the dividend payers have been doing very well. Canada's showed some pretty good resilience despite the ongoing tariff tensions between Canada and the U.S. We did see those tariffs kick in August 1st, though, at 35%. So we'll have to see how the month plays out. The expectations there is that it won't stay there, that they'll have some sort of reversion or holiday or delay, as we've seen, since January. So we're just going to have to keep a close eye on that as negotiations continue. So what are the key takeaways? Well, equity momentum maintains despite the underlying economic softness and labor strains. This market resilience and low volatility has mostly been fueled by the better earnings, but we do have to be cautious of that stagflation signals that we're seeing out there, and possible risk that we might see more turbulence if we go back and forth again on the trade war. What are we seeing come up for the fall? Well, we're seeing weaker economic data coming out. Markets could see heightened volatility in August and September from some of these things, especially that labor trend. And if the Fed signals, the last kind of hinted at possible or a U.S. cut, even though Canada and the U.S. maintain the current interest rates in their last meetings. They signaled at a possible cut that kind of fueled some optimism in the markets. But if they fall back and become a little bit more negative again, we might see volatility or that optimism revert back to pessimism. If we might see the rates stay the same or possibly go up if inflation continues. So now let's take a look at what's going on in the portfolio as well. We continue to see a healthy cash position in the portfolios, the broad diversified portfolios, at least, not the concentrated equity ones, but the broad conservative or diversified portfolios are still sitting around 15% in cash, a little bit lower from the previous months. We have allocated a few things. We also trimmed a few names in July. We trimmed our Agnico Eagle Gold position a bit, which was up over just over 100% from purchase price, and MDA, which is a defense and aerospace company, up over 200%. So as of taping this video, they both were. So we trimmed those names. We've trimmed them before, but July we did another trim as they had a really good run. We did sell out Loblaws from the position and allocated those monies to the same sector, Allemand Couche-Tard, which we've had in the portfolio for a little bit. We increased the weight in there. It had a bit of a pullback on its price due to a takeover bid it had for 7-Eleven Japan. So we managed to get in on that dip, and they've since abandoned that takeover bid, and the stock snapped back up again. So we're really happy we were able to take advantage of that. And Loblaws was a fantastic performer in the portfolio. So just taking some profits from there, where we saw it as a more fully valued position, and Allemand being a better, cheaper option for this similar exposure anyway. We added to our power sector exposure through Capital Power, through the covered call utility. We also added a new name, which I'll talk about in a second, but we really like the power sector. We continue to see electrical power as being in demand for the foreseeable future. The world runs on electricity these days, and it's just an increase in boom as to how much we can get there. And so we really like that sector, and we continue to overweight it for sure. And it's been a great performer in the portfolio. Our biggest performers continue to be those yield positions, those covered call strategies we have in there. We have them on the Canadian banks. We have them on the utilities. We had earlier ones in the year on bonds, on U.S. Treasuries, which we took out because we went to a flat outlook on interest rates. Obviously, they were there when we were expecting the U.S. interest rates to be decreasing, but we had a cover call strategy on that. We also had it on the tech stocks. We did take that out. It was a great performer while we had it. It obviously would have done quite well last month, but the tech area has just been a bit volatile, so we haven't wanted to increase more exposure there. We did add a couple of new names, Teck Resources, to get a little bit more metal exposure, including copper, which is in their wheelhouse. And we added a U.S. position into Waste Management. Their name says it all. We introduced that. We also introduced another U.S. name called Eaton Corp, and Eaton is another U.S. power exposure. So again, electrical power management. So we added them into the portfolio as well. We did reduce our exposure though to U.S. healthcare, selling both United Health and Novo Nordisk. That sector just getting beaten up these days, and the volatility and correlations were just getting way off for the portfolio process. So we removed those. So I've talked mostly about the large cap tactical portfolios. As in previous videos, I've talked a little bit or touched on our new Canadian small cap portfolio. And as before, it's not a new portfolio; it's a new managed portfolio that we launched. So we don't have performance numbers on those. We can't give performance numbers on those until we hit the 12-month mark of its existence as a managed portfolio. But it continues to be the top performer of all our portfolios, so that's great. Make sure you reach out to us if you want more information on that. I've had a bunch of calls of people asking for some information, and when it's appropriate for your portfolio, for sure we should look at it, or I might reach out to you if I think it's appropriate for you to add some of that exposure into your portfolio. It's been doing great, and if you want more information on the names that are in there, update on the positions that we're doing, do reach out to us. Happy to discuss it. Or someone from the team is always happy, because that portfolio is both myself and Harold Leishman, and our CFA Julian Agodo working on that. So we're happy to discuss what's in there and what's going on, and give you a bit more sense of whether it makes sense for you to have some exposure to that. As always, you can get our updated numbers on all our performance portfolios at the website. You can quick access the website at mikeonmoney.com, or you can go to llcprivatewealth.ca. Both those are the same site, but you can go on there, and we do update them. They're not up yet. It takes a few days for us to get the performance numbers out, but by the time this video goes out, they should be on there. So you should be able to see that. So with that, that's a July market snapshot. Thanks for watching. Let us know how you think the Canadian and global markets are going to play out for the rest of the year, or if you want to discuss your thoughts, hear about our thoughts, and talk about your financial goals, call, email, go to mikeonmoney.com. We're happy to discuss or review any of your questions with you. Do keep an eye out, as I mentioned, on our new monthly market mistakes videos that will be on the Mike on Money channel. We're going to try to aim to get those out mid-month because as this one comes out at the end of the month. But with that, I'm Michael LeBlanc. Stay tuned for our next update, and we will catch you soon. Thanks.